Shocking. Half of condo investors in Toronto are losing money. This is something we've been discussing before about how people are losing money in this housing market and how investors aren't really investors, they're speculators. So let's get right into it and I'll show you some real examples of how much money people are losing if you stick with me here. Half of condo investors with mortgages in the GTA are not making money, report says, and you'll find it really interesting where that report comes from. Roughly half of new condo investors who have a mortgage in the Greater Toronto area are losing money every month. So CIBC Economics are coming out with this report. You've got to realize that this is hilarious because they are the lenders. They're the ones extending those people credit right now, even though they're coming out with reports like this. They'll extend people credit because they don't care anymore. That's what's happened when you get into this later stages in the bubble. The banks don't care. Fraud committed just goes rampant because, quite frankly, the banks are just like, if you tick all the right boxes, we're just going to lend you the money. We don't really care. As long as you sign in the right places, we're lending you that money. We don't really care. But they should, if they were prudent with lending, they'd be saying, hold on a second. Condo investors are losing money. We really have got to be careful about lending people money in that sector because we know that people are just speculating based on the price in that sector because they're obviously not doing it as an investment for cash flow purposes because they're losing money. But no, they're not doing that. And I think that's really key to note in this article, which probably people who read this didn't even think about. The joint analysis released on Monday showed 51% of newly completed condos in the GTA were cash flow negative last year compared to 44% in 2021 and 40% in 2020. So clearly it's on the rise year by year. The amount of people going cash flow negative has increased, and this is because we're in a bubble. It just makes zero sense. Why are these people still buying? A lot of them will be doing Airbnb, which I'll talk about later. And then they also say this. They say if investors aren't buying, developers aren't building. But hold on a second. I thought it was immigration. I thought it was population growth, and that isn't stopping. No. They're actually coming out and saying what it is. They made a mistake right there and they said, oh, it's investors. It's investors driving this market. It's not immigration like we keep telling you. And even they put out reports that contradict one another. But we all know the mainstream narrative that is pushed by the banks, which is this narrative of immigration and population growth. Does that contribute to what's going on here? Yes, of course it contributes to a housing bubble. It's just not the cause of the housing bubble. It's not the main cause, which is speculation, which is obvious and which happens time and time again. That's the reason why people are just buying, even though their income isn't justifying it, because it's speculation on future price growth. So I think that's really interesting. On average, new condo investors were losing $223 in 2022, whereas in 2020, new condo investors on average were cash flow positive to the tune of $63. I'm really not too sure where they're getting those numbers from because, as we're going to go through in a second, that is not the case at all. They are cash flow negative a lot more than that, and they were cash flow negative in 2020 and 2021, turning negative average cash flow for new GTA condos, and you can see how it's obviously gone down, but I would argue that it was never positive in the first place. In general, the majority of condo investors, 72%, prefer new builds over resale units because of the time it takes to bring a condo tower. And really, there's obviously interest rate risk there as well because people aren't locking in the mortgage when they purchase the condo. So they might have bought 2021 when interest rates were really low, but then they're getting delivery in 2022 when interest rates are really high and they're just absolutely screwed. And that's why we saw a lot of these assignment sales, people trying to get out of it because they probably couldn't even qualify for the mortgage anymore when they went to get it. So 72% preferring newer builds. That could also be a factor of the maintenance fee. The maintenance fee makes up a significant payment when you're renting these things out or using them for Airbnb or whatever. So obviously, if you've got a new condo building, the maintenance fee is going to be more consistent, at least at the start, because you're going to have warranties with the building and different things. That obviously depends a little bit because if you're talking about these luxury buildings that have loads and loads of facilities, then, well, it's a different ball game, isn't it? Because now you got to pay for the upkeep of all those expensive facilities. So let's get into the example. So this condo is a 1-bedroom, 1-bath bath and it's renting for $2,500 a month. Funny story. This is actually the building where we rented a 2-bed, 2-bath condo back in 2016. And that condo was $1,900 a month for a 2-bed, 2-bath. And now it's around $2,800 a month. So that's a massive increase in the price. But you've got to remember that rental increase is nowhere near as much as prices have gone up. The rental increase that has happened has not covered the amount prices have gone up when people have been buying them to speculate. You can see how it doesn't make any sense from a logical standpoint. If you're an actual investor, it only makes sense if you're a speculator, because if you're a speculator, then the price doesn't matter because you're just thinking the price is going to go up forever. So it really doesn't matter. And you're not thinking about how much you're losing per month because you're just thinking about the end result. And I doubt even people are doing those calculations. I mean, especially at this late stage of the bubble, it's really the dumb money that's out there buying right now. We've also got this is $540,000, this condo. It's also a 1-bed, 1-bath, and literally this building is right next to 5 Valhalla. So it's literally right next to the building right here, which is the condo that is renting out. So it's a really, really good comparison to make. So this baby is going for $540,000. I mean, the rents are insane enough, but $540,000 for a 1-bed, 1-bath condo. I mean, if you're watching this and you're not in Canada, comment below how insane does that seem to you, and convert it to your local currency, whatever you're using. So it's kind of mad, but that's what's going on. And then also I've obviously took the property taxes from here, and I've obviously took the maintenance fee because that makes up a significant portion of what people are going to pay when they go out and get a mortgage on this. So now we can actually go through the examples. Home value, $540,000, down payment 20%. I'm assuming a down payment of 20%. But as we know, the most common type of fraud is people lying about it being their principal residence so they can get a CMHC government taxpayer funded mortgage and put a 5% down payment down. And do the banks care? No, they don't care. It's less risk for them. So once again, if you tick all the right boxes, sign in the right places, the bank does not care. They're going to lend you the money. And that's what happens when you have this moral hazard that's been created in the banking system through prior bailouts like the IMPP in 2008. So it's just really not good. You've got the loan term, 30 years. You've got the interest rate at 5.54%. And you can see I've put the property taxes in there at $1,454 a year. I've got the home insurance in there at $400 a year, which is about average for Toronto. And then I've got the monthly HOA at $445 a month. So you can see our total monthly payment on this is $3,063. Okay. So now if we go to the percentage calculator, we can see the person is planning to rent that out on a long-term basis. They're getting that $2,500 a month rent, which we discussed right here. Basically, if we go back to that, you can see how much they're losing. They're having to pay 18% just to keep this going. So they're losing 18% because their payment is much more than the $2,500 a month. It's $563 more. So that's a lot more than Yahoo Finance is saying. And that just increases as you get more expensive with the house. So if we were talking about detached properties, my gosh, the difference between the rent and what it costs is just absolutely insane. And again, that comes down to speculation. It's because people aren't buying it for the purpose of making money like cash flow. They're buying it to sell it at a higher price at a future point. And a lot of these investors are just stupid. They don't even calculate the money that they're losing, the lost interest rate that they could have got, because you can get 5.24% in 1-year treasuries right now. They don't calculate any of that. How much risk they're taking versus the reward is just ridiculous, especially at this later stage in the bubble. And then we've just got to think about Airbnb. So you've got the Airbnb people that might be coming here and saying, okay, $2,500 a month long-term rent. That doesn't make any sense to me, but I'll buy because I can rent it out on Airbnb and I can get $3,000, $3,500 a month. But little do they realize, because nobody thinks about risk in a bubble, is the person who's just bought on the base of Airbnb Airbnb has took more risk, because if they have to rent it out long term, they can't afford to do that, or they might not be able to afford to do that, and they're going to be losing money. And now they've just added more exposure to the economy, and they've just added a new exposure, which is to the travel sector. So that is essentially just going long the economy when the yield curve is this inverted, telling us that we're heading into a depression potentially. You know, it's just absolutely insane. But when things get as crazy as they are in Canada when it comes to real estate, you have these insane things. You have people doing insane things which make people scratch their head and think, why on earth would anybody do that? But that's what a mania is. It's like a disease. It's like a mental condition. Anyway, guys, if you've enjoyed this video, you might like that video there. You might also like that video there. I will see you in the next one. Take care of yourselves, guys.